Now, today's Nigerian Treasury bills primary auction by the Debt Management Office is expected to push rates further up. That's according to traders at UBA, who add that they expect investors to remain on the sidelines ahead of the anticipated OMO and Nigerian Treasury bill maturities. Chuka Nwachukwu, the head of bonds trading at UBA, joins us now for an update on that market. Thank you so much, Chuka, for your time. So let's start with that message around your expectations about rates moving further up.
Okay, thank you, Wally. Yeah, like you said, NTB auction is today. We expect that rate will push further up. The last two auctions came out at 6.8% and then 7.2%. So all expectation is that the next auction, which is today, will come probably around between 7.5 and 7.7%. So that's the expectation. That has kind of like affected the trade for today, for this week so far. A lot of people have been on the fence, waiting to know what the auction today will come out at. We have about 155 billion on maturity today, and so we expect that CBN will probably sell, DMO will probably sell more than that to raise further funding.
All right. How is the MPC? Of course, we know it's happening this week, and we'll get that announcement on Friday. How is that influencing trader behavior right now?
Well, MPC is on Friday. It was brought forward from the initial earlier date. So that's kind of like, the expectation is that the rate will remain. MPC will hold up parameters, because if you see what is happening so far, there isn't anything to state or to give away that the NPC is going to change the parameters. And so far, what the government has put in, but what CBN has put in place, the parameter they put in place from the last time is still holding, though we still have one or two issues as regard the exchange rate, but then we do not think that that will affect the decision of the MPC.
All right, let's talk about the naira. So the free fall continues. At last time I checked, in the parallel market, now 557 to the US dollar. Some are beginning to say now we could see 600. Given the trends that we're seeing right now, do you agree with that sentiment?
Well, I might not agree necessarily. Yeah, it's depreciating, but I do not think that 600, we see 600 within the next 4 months, or between now and end of the year. The reason being that so far, if you look at what the oil price is presently, is around $75 per barrel, and then that also will help the CBN in terms of shoving up our foreign reserve. So I believe that the CBN is working on ensuring that more naira, more FX is pumped into the system to help the naira, and then so I know that presently is around 550, 557 levels, but I do not see it go as high as 600 within the next 4 months.
I guess what people are seeing is just the trajectory. It feels like a free fall. Pretty much every day we see it fall. So many will say that is an optimistic view. But let's talk about the implications, though. If it were to go to about 600, wouldn't you agree that maybe some of the good work we've seen in terms of bringing down inflation could be at risk here? Because at 600, it seems to me like a no-brainer that we would see that inflationary pressure.
Well, 600, you're right. It might look like some of the good job that have been done has been eroded. However, like I said, the guys at CBN are monitoring it, right. And nobody wants the good job they have done to just go away like that. So I'm sure they know what to do as time go by. And like I said, I was trying to explain earlier, the foreign reserve and then the oil price is still very much up. So that's a plus on the other on that aspect. So for me, I feel that I will panic personally if the oil price is dropping and then naira is depreciating at the same time. Right. So, but now it's looking good on the oil price side. Also, I will also, if you look at the inflation, yeah, the inflation figure came down from 17.38 to 17.01. Yeah, that's the plus on that side. But if you look at the month on month, it's moved up slightly. So right. It's not where we want to be, but I'm sure things will get better.
Okay, let's pivot to announcement yesterday by the National Assembly. The government coming back to the table, so to speak, to borrow more. This time, $4 billion. How does all this, in your view, impact the outlook for rates?
Well, I believe that the government has what they call a fiscal policy framework, which is a time frame of between 3 to 5 years. So I should think that some of this borrowing has already been factored in, or is part of the fiscal policy structure that they have already had in place. Going forward, yeah, it's really not nice. People perceive that government is really borrowing much, but I feel that with some of the activities that the government is using some of these funds to do, like the infrastructural development and all that, hopefully when some of these things are materialized, people will get to see the benefit of it going forward. And then again, there's also the borrowing from the Eurobond side of it, which government hope to raise between $3 billion to $6 billion. So I'm sure all these are also factored into the borrowing plan of the government. I'm sure the only reason people kind of like get worried is the fact that the debt to the debt servicing is taking so much of is consuming a lot of our income, our revenue, pardon me. So that's the area people are worried about. But in terms of general structure, in terms of general borrowing plan, I think they have already factored that in.
All right, let's leave it there. Thank you so much for your time, Chuka Nwachukwu, head bonds trading at UBA.